Hello students, you are the future chartered accountants of India. I am CA Abhijith Acharya, welcoming all for today's video classes, Abhi CA classes. We have discussed income from salary, income from house property in the last session of the videos, and in today's video we are going to discuss the third heads of income, that is profit and gains from business and professional. So this is very important for your examinations. This forms a category chapter. If you cover this thoroughly, then you will get most probably entire mark in this chapter. Okay, this is very important. Don't skip this chapter. Okay, don't, without wasting further time, we'll discuss the today's topic, that is PGBP in short. The section 28 says the following income shall be taxed under the following head, that is under PGBP. Okay, first, any profit or gain from business or profession. BP in means in short it says business or professions. Profit on sale of import entitlement license. If in the questions it has been given profit on the sale of import entitlement license, then you should treat that income under PGBP. Okay, then cash compensatory support or duty drawback. Okay, duty drawback will be given in the case of export and import business. If in the questions it has been mentioned, then you should treat under PGBP as an income. Next, profit on sale of DEBP, that is duty entitlement passbook scheme or duty free replenishment certificate, DFRC in short. And any amount received under key man insurance policies. If you receive any lump sum amount under key man insurance policy, then that also to be treated under PGBP. Then any gift or benefits or perquisites arising due to the business or profession. If you are trading any business, if you receive any gift or any benefit or perquisites from one of the customers or any of the sellers, vendors, then that also to be treated as a PGBP. Okay, then any interest, bonus, salary, commissions received by partners from partnership account. If you're a partner for one of the partnership account, one of the partnership, then any salary received by you, any bonus received by you, any interest on capital received by you, any remuneration received by you, then that also to be treated as a business income for you. If you are going to compute your income tax computation, then any such amount to be treated under PGBP. Okay, then non-compute fees. There is a concept of non-compute fees. There is an agreement that you should not compete with these of the vendors. Then for that, if you receive any of the compensation, any of the fees, then that also to be treated under PGBP. Okay, then FMV of inventory on its conversion or treatment as a capital asset. If any inventory is converted then as a capital asset, then its fair market value on the date of that conversion to be treated as PGBP. Okay, then this we'll discuss in detail in the capital gain chapter. Okay, don't worry. And then sum received on account of capital asset under section 35 AD being demolished, transferred, destroyed, and discarded transferred. For example, if you are claiming 35 AD for the assets, what is 35 AD? We'll discuss in detail in the upcoming slides, upcoming sessions, and that asset has been demolished, destroyed, discarded, or transferred. Then for that amount received from the insurance company or any of the vendors in case of salary, in case of sale, then that also to be treated under PGBB. Okay. Then any compensation or other payment due to or received by any person in connections with termination or modification, not it is a modification, little bit of spelling mistake of the terms and condition of the contract related to the business. If you receive any compensation related to any termination of any contract, if you are entering into any contract, then if you need to modify that contract or terminate that contract, then if you receive then any amount from that opposite party, then that also to be treated as BGBB. Okay, then these are all the heads of income to be treated. These are all to be treated as a PGBP, not under any other heads of income. I hope you have understood. Then speculation business. You might have understood this speculative business, share speculative business in your PUC or in your whatever maybe stage of your learning. But we will discuss in clear in this today's topic, that is transactions in which the contract for the purchase and sale of any commodity, including stocks and shares, is periodically or ultimately settled otherwise than by the actual delivery or transfer of the commodity sales. For example, if you are trading in the shares or stocks, if you purchase today and if you are selling it today itself after some time, then that is also called the speculative business. So it should be the profit or loss from speculative business must be treated as a separate business or a distinct business and should be separated from other business of item. So if you are having two business, one is speculative business, one is other type of business, that is trading or textiles business, etc. For example, for instance, then profit and loss from the speculative business should be treated separately from the profit and loss arising from the textile business, that is in the given example, to be treated separately. Why is separately? Because that loss to be carried forward, that loss to be, for example, the loss from the arising from the speculative business can only be set off only against the profit from the speculative business only. It cannot be set off against any other business income. So hence there is a proper notice guidance note from the income tax authority that you should treat that speculative business distinctly from other business heads. The main purpose is to this only, to the set off and carry forward. What you must set off and carry forward, we'll discuss in detail in the next upcoming chapters. As of now, it is I have discussed it in brief. Okay. Then the transaction, the following transactions are not treated as a speculative business, which are under there. The hedging contract in respect of the raw materials and procurement size. What do you mean hedging contract is not so important, but if your examination, that is the concept of, if your any examiner mentions the hedging, then that should be treated as a hedging contract. Okay. Then the hedging contract in respect of stocks and shares. Then forward contract. Forward contract also means in the upcoming days I will fulfill this contract. That's also called forward contract. Okay. Then there's a concept of derivatives. Derivative means it can be comes it will become in the derivative shares and concept. If you in the questions there is a concept, there will be mention of any derivatives, then there also be treated not as a speculative business. Okay. Then trading in commodity derivatives. Commodity derivatives means agricultural product or any other commodity on that you are trading. That's also to be ignored for the treating of the speculative business. Okay. So these transactions should not be considered as a speculative business. Hedging contract in respect of raw materials or merchandise or stock and shares on forward contracts or derivatives or trading in a commodity derivatives. Okay. Then section 30. From this comes from here onwards, we'll discuss some of the sections so that we will be in a better position to understand. Don't worry. And section 30, rent, rates, taxes, repairs, and insurance of a building. Section 31 says the insurance, the repairs of plant and machinery, and the furniture. If you are a owner of those of the building and furniture of the plant and machinery, we'll discuss the one category. If you are a tenant, as a tenant, then the following category will be applicable. If you are a owner of that building or the furniture and a plant and machinery, then what will be the case? The rent, actually you are receiving that rent, so this is not allowed, not at all an expense, right? So this should be ignored in case of owner. First we will discuss in case of owner only. Then rates and taxes paid in respect of the building, in respect of the plant and machinery, in respect of any other furniture, then that is to be allowed in the sense that is to be can be treated as an expenses. If you are shown that expenses in your profit and loss account, that is allowed, that is not disallowed, that is being allowed by the income tax authority. Okay, then insurance expenses that have been shown in a profit and loss account, that is being allowed. Then revenue expenditure, that is also to be allowed. But capital expenditure, capital received revenues, that should be ignored, because if you are, I think you have understood this concept that a capital nature is to be treated as a should be added to the for respective fixed asset or respective assets, because that future economic benefit will be there, and there will be the benefit will be there for more than 1 year, and hence the depreciation can be claimed in respect of that asset. So accordingly, that full expenditures which are in capital in nature should be ignored for the purpose of the profit and loss account. So they should be ignored, that should be disallowed in the simple words. If you are paying the expenses in as in case of tenant, then the rent paid in respect of the building, in respect of the furniture, in respect of the plant and machinery, that can be allowed. If you are sure the rental expenses in your profit and expenses, profit and loss account, that can be allowed. Then rates and taxes, that also can be allowed. Then insurance expenses, if you are paying interest by yourselves on behalf of the owner, then that has also be claimed as an expense. That has been allowed. Revenue expenditure, that's also been allowed. But capital expenditure, as we have discussed in respect of the owner, the same concept will be applicable here also. So that cannot be treated as an allowable expense. That is to be disallowed. If the profit and loss account, that information is being given, we have to add back that expenses to the profit, to the net profit, to arrive at the taxable profit. In simple words, I hope you have understood. Then there is some note, the section 30 and 31. The expense is allowed only if the asset is used for business or professional purpose. If that asset is used for personal purpose or any other purpose other than business or profession, that should be not allowed. That should be disallowed in simple words. Okay. The capital repairs expenses incurred by the tenant, treated as deemed building, treated as if it were his own business, his own assets. So it will be treated as deemed building, and depreciation is allowed accordingly for tenant also. Okay. Then section 32, very important from exam perspective. So please pay attention a little bit more in this chapter, in this concept. The section 32, that's depreciations. I might you have understood, you have gone through the depreciation concept in your early commerce educations, because in a 12th educations or in a CPT or foundation examination, because there are a lot of criteria, there are a lot of the types of depreciation, WDV method, SLM method, or some other methods are there. From the exam, from here we will discuss only the WDV method or SLM method, especially in terms of taxable depreciation. Okay, the condition to be satisfied in order to claim the depreciation amount. First one, the asset should be used for a business or professional purpose only, active or passive wise. What do you mean by active or passive? We'll discuss in the upcoming points. The second condition to be satisfied is assessee must own the assets wholly or partly. The assessee should be the owner of that asset, whether in the case of wholly or in a partly. Okay. Then some of the notes. In case of lease transaction, the depreciation always be claimed by the lessor, whether it is a financial lease, whether it is a operating lease. I mean, you have gone through this concept thoroughly in case of in your first paper, that is accounting, the financial lease or operating lease, the classification, the difference between those two. In case of lease, depreciation is always be claimed by the lessor only. The lessee is not eligible to claim the depreciation because that has been already claimed by the respective lessor of that asset. Okay. Then in case of hire purchase, the assessee gets the ownership only after the payment of last installment. Hire purchase means you have to pay the cost of the asset on an installment basis, but the ownership is received only after the payment of last installment, right? As per the income tax law, but he can claim the depreciation from the beginning of the asset where the first installment is not all been purchased, where the asset is being purchased on hire purchase only, as if the asset owner, that SSE is the owner of that asset. Okay, there is a benefit given to the SSE. Even though the first condition is it, the second condition is the SSE should be the owner of that business account. In case of hire purchase, the ownership is being transferred only at the time of last installment, but the depreciation is allowed from the first day when the SSE has borrowed, SSE has purchased the assets on hire purchase. It has been benefit given to the SSE. Okay, then depreciation of asset partially owned by the SSE shall be allowed to him to the extent of his share. For example, if the asset is being owned by the SSE, to the extent of some of the percentage. For example, 50% is held by the SSE, 50% is held by the some of other SSEs. Then the depreciation can also be claimed only to that extent on which that SSE is having that ownership. Understood? For let's say example 50-60,000 is a depreciation amount in respect of plant and machinery, out of which only 50% of that, that is let's say 60,000 ka 50% होता है 30,000 can be claimed as a depreciation by the SSE. The remaining cannot be claimed as a depreciation by the SSE. If in the profit and loss account entire 60,000 is being shown, then we have to disallow remaining 50% as if it is not being the disallowed, because it's been disallowed because its share is only to the extent of 50%. So remaining 50% we have to disallow. That's it. Then in case of standby machinery, emergency spares, for example, fire extinguisher can be seen in the building, can be seen in the plant and machinery. So this is not actively used by the business holder, but this is an essential in case of any emergency. So this is treated as passive use. That asset, that fire extinguisher, is used as not as actively, it is used passively. But for that also, that income tax authority gives permission to claim a depreciation for the SSE to the SSE also. Even though it is not being actively used by the SSE, the depreciation can be claimed by the SSE in respect of those assets. That is, for example, in our instance, the fire extinguisher. Okay, this is an important topic. First, please go through once again so that you will be in a better position to understand. Then the classification of depreciation asset. There is two types of assets. I think you have gone through this concept in your accounting subject. Tangible asset, intangible asset. Tangible asset means which can be touched, which can be felt. The intangible asset means which cannot be touched. Okay. The tangible assets, there are three blocks. That is, first one category is block 1, that is building. Second, furniture. Block 2, that is class 2, that is furniture. Then class 3 is furnished plant and machinery. In terms of intangible asset, it is only class 4. Okay. Block 4 in other words. Then the rates of depreciation that has been specified by our income tax authority. The assets, first we will discuss the block 1, that is building. The residential, if it is a building is a residential building, then the rates is 5%. If the building is general building, then the rates is 10%. General building means that building is used for the business purpose, then the rate applicable is 10%. Irrespective of the rates applicable by the respective business holder as per the accounting standards or Ind AS. This is the income tax rates. If the VSC is charged the depreciation prevailing as per the relevant Ind AS, relevant accounting standards, then that should be ignored for the computation of depreciation as per income tax authority. So we have to compute the depreciation only by considering this rate that has been specified here under. Okay, then the temporary structure, if that building is temporary in nature, not has been fully completed, not has been fully constructed, then that is called temporary structure. Then that is for that 40% depreciation can be claimed. Okay, then block 2, furniture and fittings. There is the only rate applicable here is there is no further classification. There is only one rate that has been applicable, that is 10%. Then the plant and machinery. Plant and machinery, there are several categories. The motor vehicles that also form a part of plant and machinery. The motor vehicles is used in a business of running them on hire basis. If you are having the hire business, hire means the taxi services in the for instance, then for that taxis that for that what you call motor vehicle, the depreciation can be claimed as 30%. Okay, if acquired, that motor vehicle is acquired and put to use between 23rd August 2019 to 31st March 2020, only during this duration, if you purchase that motor vehicle, then if you are having a higher business also, the depreciation rate can be claimed as a 45%. Okay, the for if you purchase not in duration of these periods, then the depreciation can be claimed as a 30%. If the asset is being the motor vehicle is being purchased during this period, the depreciation can be claimed as a 45%. Not only during this period, you can claim in a subsequent year also. Okay, but what is the more important is subsequent year also. Okay, this is very important. Then other motor vehicles is for example, if you are not having any higher business, and but that is that motor vehicle is essential for your business, for the commutation purpose, then for the depreciation rates will be 15%. If that motor vehicle is purchased during the period of 23rd August 2019 to 31st March 2020, then the depreciation rate would be 30%. Not only in this previous year, in the upcoming subsequent year also the depreciation rate would be 30%. I would once again revise. Motor vehicle, if you are having a higher purchase business, then the 30% normal. That asset is business, that motor vehicle is being purchased during 23rd August to 31st March 2020, then the 45% will be the rates of depreciation. If your motor vehicle is other than for that higher business, the depreciation rate would be 15%. It can be seen in every illustrations. Okay, if you that asset is if the motor vehicle is being purchased from 23rd August 2019 to 31st March 2020, the depreciation rate would be 30%. Not only in that previous year, in the upcoming subsequent years also. Okay, the ships that also form under plant and machinery, the depreciation rate would be 20%. The aircraft, the depreciation would be 40%. The computer or laptop, the depreciation would be 40%. The books or publication, if it is owned by you or if it is owned by not by you, then that's also depreciation would be 40%. Okay, periodicals would be there. Monthly subscription would be there. The library business would be there. For all also the depreciation would be for the books would be 40%. Okay, windmills and its equipment. Windmills, that huge windmills will be there for you if you are opting for that business. And then if you that windmills has been installed before 1st April 2014, the depreciation rate would be 15%. If it is been installed on or after 1st April 2014, then the depreciation rate would be 40%. Okay, then pollution control equipments, the rates would be 40%. Okay, then other plant and machinery, the normal depreciation would be 15%. Then oil wells, that means the pump set or oil wells in the case of mining, the oil wells will be there. For that also the depreciation rate would be, for its equipment the depreciation would be 15%. Okay. The last class of the asset is intangible asset. Intangible asset, the depreciation would be 25%. Okay, super. Then the notes, there are some important notes. Depreciation is allowed when asset is actually put to use, not ready to use. If it is ready to use, not has been put to use, then that is irrelevant. The depreciation cannot be claimed. Okay, for example, that I have discussed the fire extinguisher that has been put to use in a business, right? That has been put to use, that has been installed in the business, right? That concept will be fulfilled. The concept means that put to use, the concept of put to use has been complied in this case. So we have discussed the active use and passive use. That is little bit different from that ready to use and active use, the put to use. Okay, that fire extinguisher has been put to use in the business premises, and but that has not been actively used, but the depreciation can be claimed. But what is the restriction? Depreciation cannot be claimed if it is not put to use. Okay, that terms you should twicely readily revise once again. Okay, that intangible asset does not include goodwill of the business or profession. If it is a goodwill mention is there, even though the goodwill is form a part of good intangible asset as per the books of accounts, as per the relevant index or accounting standards, but as far as the income tax authority, the intangible asset cannot be treated as goodwill, and accordingly depreciation cannot, that amortization or depreciation whatever may be, cannot be claimed in respect of intangible asset. Okay, then mandatory to claim the depreciation for all the assets. There is no assessee can skip the depreciation amount. It is mandatory to all the assets to claim the depreciation. Okay, till now we have discussed the rates of depreciation. In the upcoming part, we'll discuss the further portion of this chapter. Till then, see you. Bye bye. Have a nice day, and please revise it. once again because this is a very important chapter. Have a nice day. Goodbye. Bye bye.